I'm Colby McFadden, and for the last 2 decades, I've worked with some incredible families and individuals, helping them manage their investments and finances. I'm a father of 2 daughters and recently a grandfather of 2 granddaughters, and it really got me thinking about what resources are there for women to find a trusted, reliable source for investing and savings. So I reached out to Kristen Yoder, a good friend for years and somebody I've really appreciated their ability to call out BS. And I asked her if she'd like to work on a project where we could create a trusted resource where women could turn to learn about savings and investing.
Hi, I'm Kristen Yoder. I'm a 16-year Los Angeles cannabis industry veteran and host of the Cannabis Detector podcast. My co-host and I have collaborated on a series of episodes focused on investing in cannabis in the past. So when he approached me about doing a podcast focused on helping women build confidence in their money management skills, I jumped at the opportunity. Hello, and welcome back to the final episode of our first season, and I'm super excited. I feel like it's been like a year, and
it feels that way.
It's only been a couple months, but I feel like a different person. And
Good.
Yeah, like because when we started, I had no idea anything about finance. Money makes me uncomfortable. And like, looking at charts and shit was very confusing. And I just felt like, oh my God, like I'm swimming in, like, I don't get it at all. But I think it just takes time and having a mentor and someone to walk you through the steps, which was the whole point of this podcast, to empower women and anyone to find their confidence and apply the fundamental skills that we already have and learning a few others and, coming to this point. Like it's been a fun journey.
It's been a blast. Yeah. I mean, I've had a really, really good time. It's been a lot of fun going through it because as I've even gone through it, I've learned more and it's made me think about the ways of teaching and what things people really need to know. And you've asked so many good questions along the way, things like, what the fuck is going on and who do you trust? And all these questions that everybody has. It's been a great journey because we started with just the conversation about how do you build confidence. Yeah. And in that first episode, it was all about, well, you build confidence by, increasing your education and your knowledge. And if you think about it, we've done 8 or 9 episodes, each one 20, 30 minutes long. So we're not talking that big of an investment of time. You're talking less than 3 hours plus whatever time that you've put in yourself. How do you feel about your confidence level after that little bit of focus and time?
I think that the paper trading was a big part of it. Because I've never been a good student in school because I don't get it unless it's applicable to something. Like I cannot do theoretical shit. It just doesn't work. Like I don't think like that. So being able to like invest in things with fake money and also being able to like, because I'm a Reddit person, follow along the meme stocks and also like dipping my toe in some crypto and just like immersing myself in things, being able to actually see what my decisions could do, that was huge. I mean, especially with just being able to make like a $90,000. Well, if I started off with $185,000 investment and I made $90,000.
This was in your paper trading?
Yeah, in my paper trade. I don't know what the percentage is, like a 50%. Like almost like a 45% profit in like a month, just by playing, which that was a good boost. And also I recognized that was very unrealistic. And I also recognized that you only make as much as you invest. So if I was investing just like 10,000, I wouldn't have made 90,000, but I'd still have made a fuck ton of money in a very short period of time. And also, investing in other things that were meme stocks that did not do good. and like seeing the losses and investing in Doge, and that was stupid. And like, but these were all good lessons to learn. And so, yeah, I feel like way more confident.
What's the emotions like? What's the emotions like when you saw a losing position? When you saw something that was dropping in value, what were you experiencing?
Like with Doge, I only invested $100. So it's not like I invested a lot to the point where I would be throwing up in the corner. But I read about it in the crypto Reddit, because like a lot of people, I mean, everyone invested in May when there was a peak in crypto. That's why it was so high, and everyone ate shit like the next, or was it April or May? Everyone ate shit. Like they saw 60,000 down to 30,000. I can only imagine, like they all talk about, you know, curling up in the fetal position. Like I didn't experience that because I'm not stupid enough to invest the crazy. I don't even have enough to invest that much, but I definitely felt like, hey, okay, I got this now. Okay, so like, do your fucking research. It's like what we talked about, and I didn't. I just listened to someone else, and that's not something I normally do.
And what's unique that you did that's different than others is that when you got into that losing position, you know, the reason I asked that question is some people go, man, you know, I doubled down on it, and other people say, you know, I just panicked and I got out. What's really interesting in your particular situation, what you did is you did a little more research. You did a little bit of homework while you're in that position. And then you made a decision of, you know what, I'm going to take my losses and move on, because you didn't have the same level of confidence in the position after you did your own homework. And, you know, there's an old saying that says, you know, good traders know how to take a profit. Great traders, great investors know how to take a loss, because it's one of the hardest things to do is admit that you were wrong or you were too early or whatever it was. And so that was really, that was part of that learning process where you didn't let your emotions get control of you to make, not the second time. Yes, exactly.
I mean, there's a lot of people that are like, dude, dips happen, you have to hold. And I'm like, I'm not going to hold on a fucking meme coin that doesn't have any cap, that will just continually make more currency. Like from what I've learned, like that devalues currency. It's called inflation. And we're living it with the dollar. Like right now, when everything is more expensive, like I think that it's just, you know, and then like you talking about the reversion of the mean and us looking at the stock charts, like historical, we are in an unprecedented time, which it puts everything in perspective to me. Like that, I think that was the most important lesson of all, is like a week, a month is not fucking long enough to make a decision on where something is going. It's better to like look at the whole thing and like figure out, you know, the reversion of the mean. And so it just didn't make sense to gamble on something stupid. And it also makes me very hesitant to invest anything when it looks like we're bound for a crash economically. You know, so I feel like I'm definitely risk averse, you know, but I also see that like, if we just wait a little bit, or we put money in some stuff, but wait a little bit, there will be an excellent opportunity to make some money while everyone else is like getting screwed completely.
Well, it's been a hell of a journey, because in that short couple months, there's been a lot that's happened in markets. There's been a lot of euphoria. There's been a lot of FOMO. There's been a lot of things. And in that process, you know, what you've seen your process has gone through, which is, you know, first get educated to build your confidence, find out about your money personality, because that helps you understand, should you be long-term or short-term or both. We covered time frame of, you know, making sure that when you're investing, that you're putting the money in names and investments based on a time frame that's realistic. And then we got into all the technicals and the fundamentals about reversion to the mean, which now, as you mentioned, you're seeing how things can get so overvalued, and sometimes they'll get way undervalued. You know, you can have both sides of the coin, and now we just got to find where that middle line is, which we talked about in the last episode. And now, now we're ready. I mean, we're ready to build a portfolio. We've rehashed, what the structure should be. And so I did bring that slide back in. So then we could talk about, as we go into season 2, what from season 1, learning our confidence and our time frame and building a structure of portfolio, stepping back and looking at the big picture to make sure that we're not investing at a time that's overvalued or undervalued. And if we are, how we're going to manage the risk, so that reversion to the mean.
Yeah.
So now it's ready to put it all together. Let's take the ingredients of the food and put it together, and let's make a pie.
I was gonna say, let's make us some pasta.
Let's make us some pasta.
Yeah. Okay. So let's take a break real quick, and then we'll get to the circle graph, and then we'll go from there. Okay.
Sounds good.
Okay, so let's bust out the graph. So if you're listening to this as an audio, you should really check out our YouTube channel, Confidante Investor, because we do all of these video interviews, and the charts are helpful to get a good idea of what we're doing.
Absolutely. And so right now, if you are listening on audio, what I'm going to share with everybody is a portfolio structure. It's a slide that we've been using for quite some time, and you can picture it like there's a few different circles, and then the middle of it is the core part of a portfolio, and half of that circle, so figure half of that pie chart, we're talking is more of our long-term investing, things that we want to invest in where there's a rising secular tide. The tide is rising over a long period of time. So a good example of this would be the technology sector over the last 10 years, right? Where you're putting your money there, you believe that the tide is rising over the long haul, and what you're looking to do is add money to that anytime there's a dip. So like you've heard in the phrases out there, buy the fucking dip. Well, this is the part of the portfolio that you're saying, I'm investing, I'm not trading, I'm buying good quality names that I believe will grow over the years. And if there's a sell-off, I'll buy more. It's the attitude, if I liked it at $10, I should love it at $8. And it's because I really believe in them. So based on, what you've learned over these 8 episodes, and by looking at the markets and kind of looking at the sectors, is there anything that for you that you look at that you say, I do think there's a long-term trend, and so here's a sector that I want to particularly focus on?
I mean, definitely alternative energy, because climate change is in the news every freaking day. Living on the West Coast, we have so many freaking fires, and the heat wave in the Pacific Northwest, and like just a mega drought in California. And as things get more crazy, we have to figure things out. I mean, if you look at Texas, their energy situation is nuts, because at least in California, when ours was crazy, it was Enron manipulation. But like, they have legit climate issues. When it's getting too cold, too hot, and their shit breaks down, there has to be other alternatives. So I think that's just a given.
And I would agree with you, because demographically, you have a situation where the next generations, people, baby boomers and younger, are way more in tune with the environment than the generations before. As people are going through education and going through school, it starts to become part of just their belief system. And so now when you look at the studies of different CEOs and CFOs, people who are leading companies, it's not only an interest, some of them feel a responsibility to make sure that the environment is part of their business. So you really see a shift there. And then you also just see it politically. The Republicans and Democrats, they're not, neither one of them want to, shit on the whole world and globe and have it end. It's just their way about going about it is different. But nonetheless, both sides of the aisle, I think we'll start to see pressure, especially from Europe and other places, for the US to really become more alternative energy focused. You're already seeing it now. So I think you're dead on. There's definitely a trend happening there. That those companies just need to get profitable. And I think the advantage for the Chevrons, the Exxons,
it gets better. Right.
Well, and the big boys have an opportunity there. Is a lot of people don't understand that the Chevrons, the Exxons, the British Petroleums, they have very big investments in a lot of alternative energy areas, and they're very involved just quietly or through private equity or venture capital. So I like that alternative energy space for that long term. So I totally agree with you.
Yeah, another one is freight, shipping, because I mean, right now, this global supply chain is fucked. Like, it is crazy how screwed up everything is. And so I feel like, if anything, and I could be wrong, but like, they have to invest in global supply chain infrastructure and freight, and get better at it and make more of it on the long term, because as we have more climate crises, as we have more pandemics and other things, and as we do more online shopping, we have to get ahead of the demand. There's a crazy demand. So to me, freight seems like a good long-term investment as well, because it's essential to keeping the global economy running. And it's not doing very well right now.
Yeah, and if you have infrastructure changes or infrastructure bills or expenses, spending on infrastructure, you could see that trickle over into that area. And then the world of cybersecurity, a lot of us just recently saw in the last few months that cybersecurity around logistics becomes really important. So yeah, there's definitely some trends there.
And then metals. On the commodities side, because you need metals for everything, including shipping, but also, I mean, for technology and other things. And I mean, you kind of blew my mind in a way, because I'm like, how do I invest ethically? And this is something I struggle with still, because mining is not good for the environment. Metals, it's not like a good thing for the environment, and or people or countries. And at the same time, it's like, well, poor people can't do shit to help anyone. So maybe the balance is you invest in things that don't always sit well with you, so that you can take that capital that you make and you invest it in a solution. Like, is this like how, I don't know, I'm trying to pick up this mindset that you have to have money to make change, and so you have to make it. And there's very few ethical ways to make real money, it seems like.
Yeah, it's a struggle. And that's why at our firm at Quiver, one of the things we did is we started a thing called Doing Well by Doing Good. And it was essentially to address this, which was, hey, we can't always know what we're investing in, what they're really doing in every aspect to the environment or to different populations, this, that, the other thing. You can do a lot of homework, but sometimes you still get surprised. So what we do in those portfolios is we structure it so then that way the earnings, somebody can decide what percentage of those earnings they can then donate to a charity or donate to something that does some good, as a way to at least help offset. And so, we call it Doing Well by Doing Good, because you take some of your earnings and you give it to a charity or to an organization that can, benefit from your wise moves in the money markets.
I mean, in the first episode, the deal is you give me 10,000 to invest, and then I donate a portion of that. And so I can
Same
stuff
structure.
that.
Yeah. All right. So are there any other long-term ones before we go into some of the more shorter term ideas?
And the alternative meat.
Alternative meat.
Because
alternative food.
I'm a vegetarian and that's all I eat. And I think that people, as the alternative meats start tasting more meaty, it's not as not palatable to meat people. I mean, cows really fuck up the earth and climate change with methane output and deforestation and whatever. So it's like, let's find other ways to make meat. So those are like my main ones that I think are my long term.
And I would say along that alternative food, you could throw in there ag tech, technology that goes around agriculture and food. because that even takes you down the path of 3D printers and all kinds of things.
And that goes into my realm with cannabis, because while I don't want to invest in cannabis touching companies, I do know and understand that industry very well, and ag tech serves it. And so that's something I'm more familiar with, understanding where it fits in.
That's an industry where you can focus on the ancillary,
Exactly.
the companies that cannabis is a part of their business model, not their complete business model.
Exactly.
And that would be another great area. Okay, so those are some of our longer term, because then I agree with you. All those areas seem to have this rising tide. They're trends that look like they're going to last for a period of time. And so what we'll do in season 2, in the very beginning, we will identify within those sectors the exchange traded funds, and then we'll pick a handful of names that are the biggest names that we feel in those particular sectors that are on our watch list. And whether we will buy them or not at that particular time will be dependent upon what's going on in markets and where the charts are. But we'll take about 50%. We'll take about half of what we're working with, and we'll invest it on that longer term thesis. And then we'll leave some money, and let's say to another 25%. So if you're listening to this audio, picture this pie chart now. We talked about half of it. Now we're going to talk about a quarter of it being things that are what we call tactical or swing trades, which is essentially, it can be the same names that we have in our long-term bucket. It's just we're going to be buying them when they pull back with a little bit of extra money, and then when they rally up, we're going to get rid of it. So this is how we're going to add some extra alpha or oomph to the portfolio, and also satisfy somebody's needs for some short-term money-making possibilities, or some shorter-term goals, if their money personality and their risk can handle this type of approach. So is there any areas that you're looking at right now that you think are better for you and what you're looking for as far as like shorter term goals and accomplishments?
Well, there's the swing trade, and then there's like the day trade part. And so I struggle to differentiate the two, because I guess crypto is definitely something I could see in the long term being a part of it. Some of them, not many of them, like maybe 1 or 2 of them, I would like to invest long term. And then in the swing trading, the meme stocks were really fun. It's like fun to jump on that train and be a part of some crazy bullshit on Reddit, where it's like everyone's calling each other a retard, and like I don't know, man, I love it. It's very contagious, but also I learned that it doesn't always work out. And then learning from you, and also, honing in my BS detector, that there are financial people on these subreddits fucking with people to hype things up to make a profit that people are going to fall for. So I don't know if that's the other 25% or the tactical swing.
Let's address the first question, which was, let's identify the difference between day trading and swing trading. So that way everybody has a pretty clear idea. Day trading is really where every day you're sitting there in front of your screen and you're picking something and you're trading it multiple times within the day. It's very rare that I find a day trader do one trade in the morning, one trade in the afternoon. They're usually trading throughout the day, and they're using some kind of tool, some kind of technical analysis to help them catch support and sell resistance on really short time frames. And they, so day trading is something where you could be doing multiple trades a day. And if you're going to do that, you better take a lot of courses on support and resistance and technical analysis, and really invest your time and energy, because it's a full-time job type of thing.
Yeah. Now that you mention it, I think I dated someone who did that, who would wake up like right when the market opened and had 6 computer screens with all kinds of graphs. And I was like, this seems like a very stressful situation.
Yeah.
So
I don't want
to do
that. Day traders tend, the good ones, and I'll tell you, I've known a lot of day traders, and I only know a few that do well. and that make a living on a long-term basis off of it. So that should tell you something right there.
Yeah.
But nonetheless, the ones that do it for a living and don't have high levels of stress, they have a system. They have a process, and they have a probabilities-based system that gives them edges. And that doesn't prevent them from losing. It's just a different way of living your life.
Yeah.
Swing trading is more for the person who says, I don't want to sit here and watch this stuff minute by minute, day by day. What I want to do is I want to buy something today, and I might hold it for a couple days, a week, a month, 2 months. I'm really not married to the time frame. What I'm more married to is I'm going to look at a chart. I'm going to buy this thing at support, and I'm going to know where a level is, my target is on the upside. And as I approach that, I'm going to start to take my profits off the table. And so it's a way of buying the dips, and then as the market moves up, reducing your risk by taking your winnings off the table. Go with the old adage, you never go broke by taking a profit. So swing trading
is
more of
stop
a
loss,
discipline.
Stop loss, take profit. That's what swing trading is because then you don't even have to pay attention. You can just set your parameters.
You can set your parameters, and you can have a life with that. And it's best to do this, in my opinion, it's best to do this in conjunction with holdings that you already are paying a lot of attention to. So let's say that you have identified in your long-term bucket that you want to have a holding like, I don't know, I'll just pick Google, for instance. And you say, hey, you know what? I know Google is going to be one of those stocks I hold over the long haul. Well, on those times that the market has a correction, like we had March of last year, where everything sells off, including Google, okay, then maybe with some of your swing trade money, at that sell-off, you come in, you buy at a level of support that you identify on the chart, and then you pick a target on the upside. And as it approaches and grows that way, if it does, you start to reduce. If you're buying on support, then you can also place a stop loss right below that as a way to protect yourself. So that way, maybe you risk 3, 4, 5% of capital before you realize, you know what, I was wrong. So swing trading is about really, hey, I want to buy it, but I don't want to babysit it moment by moment. And it's already something that I'm pretty aware of and have watched over the years. And I know I understand its behavior.
This reminds me of something I read in my my book that I just got. And I believe that it was either a day trade account or a swing trading. You have to have a specific amount of money in your account to even be able to do it. Like one of them requires at least $25,000 in the account in order to do it. And I can't remember if that's swing trading or if that was day trade.
Yeah. So what they call them round trips, which is a buy and a sell within 24 hours.
Yeah.
So if you have a buy and a sell within the same day, and if you have 5 of those, and don't mark me on this rule, but I believe that if you have 5 of those within 5 days, then your account will basically get identified as being a day trading account. And in order to be identified that way, you've got to have $25,000 in there. If you don't, they'll put a restriction on the account, and you have to take like a little bit of a cooling off period.
I believe Webull has limited my account that I opened just by connecting it to my bank account, which has got like nothing in it, to only being able to execute during the trading day. And that's it. I cannot do any overnight trades.
Correct. Which you don't want to do.
Yeah. And I mean, well, because then I'd be like a crackhead having to like stay up or something. So
if you want to do after hours trading, margin trading, or day trading, all those kinds of things that are now a new level of risk, the clearing firms are really, they have parameters that you have to go through basically an approval process in order to be identified as that and your account coded for that, so then you can do those things.
Yeah. Okay. So for now then I would be limited to just doing, I mean, but I could do swing trading because it's still stop loss, take profit, but it would be during the day, right? Yeah.
And you just be cautious if you bought something and you got stopped out in the same day. then you wait a day or two before you go back in and buy, which you should do anyway, because a lot of times, one of the biggest mistakes people make is they enter in, they get stopped out and they go, oh man, and then they go back after it again. And then they get stopped out again and they go after it again and they keep buying and before they realize, oh, I'm just wrong on my timing. So it's
and
important.
Things change at the beginning, the opening of the markets and the close of the markets. Things change. So.
Yeah, and this, you bringing up a good point, is people should realize there's what we call the smart money and dumb money index. Smart money index really watches the last hour of trading, because most professional systems, they do most of their decision making in that last hour after they've had the full day of information before they make a decision. Whereas most individual people are very emotional and they tend to do a lot of trades early in the morning. They wake up, they get their emotions going, they thought about something overnight, or they were in a position and they wake up and they realize they're losing in it, and boom, they act real fast. One of the first things people should do is, if they are operating in markets, that for the first 15, 20 minutes that the market is open, you shouldn't do anything. You should just sit on your hands. And if you find yourself being somebody who's up early and making trades really early, then you may also want to question some of your addictions. So, but you know, and so, you know, because it's easy, you'll see, we've seen articles recently about how people get sucked into this, and it's really, I mean, your emotions are, you've seen it over the last few weeks, where, a little bit. Yeah, where you just go, wow, I did not, especially when you start to see that you're making money and it was so easy. You know, you put some money down and then all of a sudden you start to see the account balance rise. You start to move into that euphoria phase really fast. And when you're in euphoria, you make this, people make the biggest, riskiest decisions during euphoria, because that's when their testosterone levels are high and they're like, woohoo, yeah, I can't lose. And then whack, you know, that it yanks you right back down.
Yeah, I think this would make a good episode next season, is to talk about the addictive nature of trading apps, and why Robinhood and other apps have gotten in trouble, because they gamify it, and it's not a fucking game, it's your life. And I've also read on Reddit the dudes who were like all in on GME and then it crashed and they just quit their jobs and were like looking at houses, and all of a sudden they're like, fuck, I just lost, like, I need my job back, dude, like, you know.
That's what happens. All right, so in our long term, we've got things like alternative energy, alternative food, ag tech, ESG, which we're also in that alternative energy space. In the tactical and the swing area, we've touched upon possibly crypto, which I do think that's an area where you could see some swing trades. And what I you know, one of the things that I think is also an interesting area right now for a potential swing trade is the cannabis space. And I know you know, I know you and I have had a lot of conversations about the stuff that happens behind the scenes in cannabis and how crappy a lot of these companies are. But as a sector, what's interesting is I do think that you could have, from a swing trade perspective, over the next, from now to the end of the year, possibly some news events happening around that space, around banking or this, that, the other thing. So I think that would be another area that could have the possibility.
It would be a shame to have an expertise in 16 years, expertise in an industry and not invest in it, because I hate it. But you're right. I mean, volatility wise, it's nuts. So it would be good for swing trading, because there are big rises and big drops a lot, like very often. So true.
And the other I was thinking in there to keep an eye on is the metals and the commodity space, because just in the last handful of weeks, if we get started in putting money to work in the next couple of weeks, a lot of the commodity space between lumber, gold, silver, all of them across the board took a good hit the last couple of weeks. They've had a nice sell-off. And so, you know, if people's risk parameters are right and they like the way the charts look and the fundamentals make sense, that might be an area that seems to make sense too.
Yeah, I mean, especially with the dollar being weakened by inflation with all of the stimulus.
Yeah.
Yeah.
And the dollar would be the tell there. You bring up a really good point is to watch the price of the dollar, because sometimes you can think the dollar is going to go low, like all the Obama years. Everybody was saying, oh, the dollar is going to be worthless. That's it. But if you look at the chart of the dollar over the 8 years that Obama was running the show and everybody was saying the dollar was going to become worthless and was worthless, over that whole 8-year period, it never made a new low. It stayed pretty flat and had a trajectory slightly higher. So all the news and everybody was saying one thing, but what was actually happening was the opposite. And the dollar is really important for that commodity space. So that's a great way that when you get into these swing trades, one of the big questions that you should always be asking yourself is, how could I be wrong? What is the identifier that will help me understand if I'm wrong and I can get out of the way? Well, in the commodity trade, the dollars are really good identifier, because if you're expecting commodities to rise and they're in that kind of trend, but for some reason, something happens globally that causes people to chase and save dollars and it pushes the dollar higher, that could totally derail your trade on commodities. So it's sometimes good to look at what could be the kryptonite of your belief system.
Totally.
Yeah. Anything else that you like, kind of more intermediate or shorter term that you think we would play with?
No, I mean, not really. I've really been focused on the long term or like crypto. You know, and I mean, Starbucks, I don't know where that fits in there, but I'm addicted to it. So it's like something I definitely am going to invest in. But it seems to be pretty stable.
Well, and that's good, because there's times to be focused on short term. You know, when there's a lot of euphoria, you can do that. And that only comes and goes. So let's wrap it up with one last thing, because, you know, in the very beginning, one of the things that we had talked about is how women are just natural consumers. You know, like they're great at discerning, and they're consumers. They're great at seeing trends. So if you were to add a Kristen touch to this and say, hey, outside of the secular trends and crypto or this, that, the other thing, or anything that everybody's talking about, is there any consumer names or things that you feel that you would possibly consider in a portfolio based on just your own consumption?
Yeah, so recently I found myself becoming more feminine for some reason, and I think it's because I've been wearing shirts with cats with weapons and sweatpants for like 2 years, and I feel like the world is opening up and I fucking want to feel like a woman again, and that makes me think, and this is also, yeah, this is also showing in the markets that retail is booming because of stimulus money, and people gained weight and they have to buy new clothes, or they're sick of feeling scrubby, and so makeup and fragrance and clothing is starting to go up, which I think as a woman, where's my money gone? Clothes, like clothes, yes, and shoes. So like investing, taking and food, like grocery stores is another one. Like, you know, I don't know if Instacart is, I don't think they're publicly traded, but any grocery stores that adapt or get a really good system where you can order online and pick up would be something else that I would be investing in, because that's what I do. And I think a lot of people are getting into order ahead, pick it up type of thing. So
so there it's the technology, right? So it's the technology and the providers behind it. And when you do your homework there, you'll find, and it's a lot of people will say, oh, okay, what's the app? Well, you can even go deeper, because there's technology and software development, hardware development that actually goes into a lot of this stuff to make it all work. None of us know about it. We just, you know, there's a lot of things that go behind the scenes to make all these things work smoothly. And a lot of those things are one company's IP, and that's what they live on. But if they can continue to expand it across the globe, it becomes a good investment. So that's an area that we'll search. We'll see if we can find some of the behind the scenes names that nobody really knows about that support these consumer trends. I think that's a great one.
Yeah, so I think that's, you know, the other area is I mean, that's what I learned when I was 16. Women are good investors because we are natural consumers, but instead of buying, instead of consuming, invest in it. So yeah.
Consume with your winnings, right? So
yeah, totally.
Well, good. I think that builds out a hell of a portfolio because we've got some long-term, intermediate term. We've got some things that are focused around the trends that you're seeing and experiencing. They're all around things that you're interested in. They're all around things that you're willing and wanting to do more homework in, right?
Exactly.
Because that was a big part of what we talked about in the beginning is stay engaged. And so invest in things that you know about or that you want to know more about. So I think that accomplishes it all. So I think that's a rock star structure for us to go forward. And I think excited. Now we can really get into the names and let's get into why we're buying them and show people the charts and tell them the fundamental stories. And then they can watch us succeed or fail based on what happens next.
Yeah, I think that's an added pressure that will help me be more strategic. And also next season, we're going to bring on sector experts as well, because you know, you can only do so much research. And as a strategic advisor myself, it's like I tell people, like, you could spend hours and hours and hours trying to figure out what I could tell you in 15 minutes. It just depends on how much you value your time. So it's like, you know, I can do research, but there's no lack of depth to how much research you can do. It would be great to talk to other people that really specialize in their specific areas to like get to the point.
That'll be exciting. I've talked to a couple people in a few different sectors that the audience is going to love, and they're going to enjoy it. So that's I'm looking forward to that.
Awesome. So thank you everyone for joining us on this journey.
And a great first season. Thank you.
Yeah, absolutely. And hopefully you picked up some things. Like, let us know, send us a message, leave comments on YouTube, leave us a review wherever. We want to hear from you. And we're gonna make some like workbooks or worksheets to help go along with what we've gone through to help you. And if you have any questions, let us know, because we can all learn together. So thank you for joining us, and we will see you soon in season 2.
All right. Thanks, everybody.
Thank you for being a part of season 1. Make sure to give us a like and subscribe now so you catch season 2. Visit confidanteinvestor.com to watch more episodes.